Hello, everyone. Welcome to the stock-specific class here for Thursday, August the 5th. Conditions are starting to improve. We'll take a look at the charts here in just a second. The market breadth just isn't quite there yet. If we look at the buy-sell ratios here, again, we're looking for that overall market buy-sell ratio to be over 1. And with a little bit of the pullback recently, it's kind of dipped back down a little bit, but we're close. We're getting there as far as being a little bit more confident about getting into some of these trades, at least in increasing the participation in some of these trades. We don't want to start getting aggressive until we start seeing that breadth follow through. Now, again, looking at individual charts, I want to first of all, let's look at the SPY. You can see it's not much different from what we were looking at on Tuesday. We were looking like we were going to break out or getting ready to break out on Tuesday. We pulled back a little bit yesterday. We're back up to this breakout area here. But the fact that, again, we're moving sideways, eventually we should break out. Now, again, we haven't broken out yet today. It's looking a little bit stronger today, but it could still stay within this range. I mentioned that on Tuesday. I said even though we had a nice strong day, looked like we were going to close near the highs of the day, I said that, it could still stay in this sideways range a little bit. Sure enough, yesterday it pulled back a little bit before coming back up again today. So that could still happen for the rest of the week, where we're just have a sideways week. But ultimately, this behavior should lead to some sort of a breakout. Now, again, when I say breakout, I don't mean it has to break out and run. It could just break out. It could barely break out and then either pull back again or move sideways again. I mean, here it broke out and immediately started to move sideways. But you should still see that breakout. Here you had some sideways movement. You broke out of it, but then you immediately had a sell-off right here. So the high probability when you have that sideways move and the previous move was up is that it should break out of that range and go higher. It doesn't necessarily mean it's got to run and make a huge move up, but it does tell you there's a high probability that it should move higher, and that's kind of the edge that you're looking for when you're noticing that pattern, and that's kind of what we're doing right now. So, I mean, that being said, too, we still don't want to be overly aggressive based on the chart there. If we can find a couple of trades to consider, that's fine. But, we'd want to see that break out and break out on good breadth before we'd want to start jumping in and getting a little bit more aggressive there. But one thing I want to point out, too, is that so today the S&P is up almost 0.5%, just under 0.5%. The Dow, very similar chart. It's kind of still in that sideways range as well, is up right at 0.5%. NASDAQ 100 breaking out a little bit today, right at 0.5%. But this is what I was telling you to watch for. Look at the Russell 2000. Really big up day today. Again, it's not breaking out of anything. It's not near its breakout area there. But again, look at how much percentage-wise it's up. It's up 1.5%. And so that's what I was talking about earlier. One of the signs that the breadth is improving is you want to see the Russell 2000 on an up day outperforming the other indexes, and it's 3 times what the other indexes are doing today. So that's a good sign. Now, we've seen this before, though, where it's a one-day thing. The next day, it's back to lagging again. So we want to see a little bit more. We want to see some follow-through to this. Do we have another update tomorrow? Do the other indexes break out tomorrow, the Dow and the S&P? Or it doesn't have to be tomorrow. Could end up being next week. But soon here, do we start to see those break out and Russell start to outperform, the small caps start to outperform? That's something we want to keep an eye on. So although that overall buy-sell ratio for the market was still under 1, This is telling me that that could improve very quickly. We could be over one pretty quickly if we have another day like today. In fact, when this updates overnight, remember that indicator updates overnight. With this type of a move right here on the small caps, I wouldn't be surprised if that buy sell ratio of the overall market gets very close to one. If this holds again into the close, and then it wouldn't take probably just another decent up day would probably get that ratio up above there. So we're real close to seeing this market start taking off again. At least that's what I see. And that's good because we haven't had a whole lot to talk about for the last couple of weeks as we've been kind of in this back and forth whipsawing type condition here. But that's exactly what I want you to look for is, do you start to see the Russell start outperforming the other indexes? And that's a good leading indicator of a healthy trend, is when you see those small caps participating. All right, we can also take a look at, I do want to quickly go through, I know we normally go through the market update stocks mostly on Tuesdays. We have a little bit of time today to be able to go through those. The bonds taking a little bit of a drop today, but again, those key areas, we're still kind of within that range, that no man's land range right there. The trend is still ultimately up, but we don't see anything indicating a trend reversal. Even with the downward move today, it's still holding that uptrend line. So I don't see anything changing from what we talked about on Tuesday. Gold has come back down. We've been in the sideways range here. I talked about breaking out above here or below here. We're moving down to the lower part here, so we want to keep an eye on whether gold breaks below that lower range within the next few days. If it does, that would be bearish. If it holds right there and starts moving back up, it still ultimately could be bullish. The pre-move before it moved sideways was up, so ultimately I would expect once the sideways move is done to break up. If it does break below it, though, that would be kind of a bearish sign, and doesn't mean I'd be shorting gold necessarily. I don't see a reason to short gold. I don't see a real strong bearish chart on gold, but I definitely wouldn't want to be looking at buying gold if we break below that sideways range. It'd be definitely a signal to go neutral. Oil. Now, I expected oil to on Tuesday, we had this kind of bullish reversal candle that was lining up with this other side right here. I talked about the possibility of this being a bullish head and shoulders pattern. It still could be that. We did dip a little bit lower, though, yesterday. Now, we've rebounded today, coming back up. But if this goes too much lower from this point, if it reverses today's bullish reversal, that would be two bullish reversal days that were reversed. This one was a bullish reversal day. We opened down here. We closed up here. It reversed that. It came down lower yesterday. Here, we opened a little bit higher. We're going to close, looking like we're going to close higher. That's another bullish day right here. If we reverse that, where we're at right now, we want to hold right in this area right here. You can dip a little bit below that in a head and shoulders, if that is still a head and shoulders pattern, inverse head and shoulders pattern. But this is kind of a critical area here. Really, you start rallying off of that if it's going to rally. And if it doesn't, you have to start looking at the possibility that this thing is still going to be trending lower. So by Tuesday, we should have a little bit more clarification on what's going on right here. And we can comment on that on the next market update class. The dollar, you're looking at the sideways move right here after dropping. We're suggesting, and having gone to a lower low right here, we're more bearish on the dollar, expecting it to drop. Had a pretty decent bullish day yesterday. Today's a little bit of a neutral day. That hasn't changed. We're still in kind of the sideways range. I would anticipate that the next move should be lower. One thing I did point out, I think, in this, when I was talking about this, is even though it was moving sideways, there's still a possibility you get a little bit of a rally before it drops. When you're in that downtrend, when you're in a reverse from an uptrend into a downtrend, you have that impulsive move down. You can have kind of an ABC, bearish ABC pattern look to it, where it's a little bit more choppier sideways, but you get this little burst up that makes it look like it's going to rally back up, and then it reverses off of it. So The fact this is still kind of choppy and sideways could have a little bit of an attempt up that kind of sucks some people in, sucks some buyers in, and then reverses. But that still looks like it's acting like a trend reversal right now, impulsive up, impulsive down, and then moving sideways right here. So I would still look at that as, I would expect that it has another move down, at least as of right now. That could change, but again, that's why we're flexible. We're not trying to be market psychics. We're not trying to predict. We're trying to forecast, and we're trying to adjust based on those forecasts. We don't want to get too locked into our analysis because it can change pretty easily. So I must have clicked on something here. How do I get rid of this thing? There we go. All right. And then the VIX has moved lower. That's a good bullish sign right here that it's, we were looking at kind of this moving down and starting to kind of roll back up a little bit. But the last couple of days, you've seen the VIX kind of come a little bit lower there. That's a good bullish sign so far on the VIX. The chip stocks, we mentioned this on Tuesday, they broke out right here, very strong. A lot of that had to do with AMD, but there were some other chip stocks that started to participate as well. Micron had a pretty good rally day in there. But that's a bullish sign when the chips are really strong. Transportation stocks have been lagging, and they're still lagging a little bit, although they're up over 1% today. So you remember the Dow was up about 0.5%. So they're outperforming the Dow Industrials today, and that's a good sign. But we do want to see the transport start to rally. That is an important indicator for the economy. When transportation stocks are lagging, it tells you that it usually is a sign that products aren't moving around. And it's not just products. Airline stocks are part of the transportation index. It could mean that people aren't moving around as much. And again, that's why you look at it, is it can be an early signal that things are slowing down when people aren't ordering as much and products aren't moving as much. It could be a warning sign there. And so we want to see these, and it's been lagging for a while. It's been dropping in relation to the Dow Industrials for a little while now. We do want to see that start to outperform to gain a little bit more confidence in the uptrend of the market if the uptrend is going to continue. If this continues to lag or starts to diverge where it starts dropping, even though the Dow Industrials are rallying, that's a big warning sign we want to pay attention to. So a little bit of good news today with it outperforming, just like with the Russell outperforming today. It could just be a one-day thing. We want to see a little bit more consistency with that outperformance over the next few days there. That's something I'll be keeping an eye on. And then we were looking at Bitcoin too. Throw a Bitcoin stock in there I just kind of chose Grayscale. GBTC is a way to kind of just track what Bitcoin's doing. Looks like Bitcoin is rallying a little bit off of a little bit of a pullback here. We're seeing if this is kind of bottoming out. We're starting a new uptrend in Bitcoin. That's something we're keeping an eye on right now, see if it continues to behave like an uptrend. If this can break out, you've got a higher high right here. This would give it a higher low. And you've got one of those, after coming down right here, that would be some of those early signals or clues that we could be reversing back into an uptrend on Bitcoin. Again, I'm not saying you have to go out and try to trade Bitcoin or anything like that, but the market recently has tended to had a pretty good rally when Bitcoin is rallying. I think a lot of that has to do with it's a signal. As of right now, it's kind of a signal of speculation. There's a lot of retail investors, a lot of millennials that are really hyped up on Bitcoin and really involved with Bitcoin. And so when they're participating, they're buying, they're also usually buying other things such as small caps and some of the riskier trades out there. You've heard of the Reddit crowd and the Robinhood traders out there, groups of retail investors. that it's kind of a signal that they're getting back involved. Now, they're not big enough to move the market on their own, but it gets the institutional traders as well involved in some of these riskier trades when they see the retail traders jumping in. A lot of times they're trying to take advantage of the retail traders, and they're often pretty successful at doing that. But in the near term, it's something we can take advantage of if we see that behavior. So that's why I kind of threw this in there. That's something I've been kind of watching a little bit, is along with those Russell 2000 stocks. If Bitcoin is rallying and the Russell 2000 is rallying, it's a signal that there's speculation going on, and you'll start to see some of these smaller companies that were really driving the market late last year and early this year, really causing some of those big gains in the market. It could be a signal that some of that could be returning, and that'd be a good sign. At least if you're bullish in the market, it could be a really good sign there. All right, let's start looking at some individual stocks. Under computer and technology here, let's go to the hold section. And, these first few stocks, this is something just to keep an eye on. Remember, the scaling software is grabbing every stock out there that it can find, and some of these are OTC or over the counter stocks, meaning they're not trading on an exchange. Usually you can tell by what they're priced at. If I see a stock that's worth 2 cents or 8 cents, I'm not going to bother really looking at that. So, I like to see, usually I like to see like $2 or $3 or something like that to show that there's a much stronger probability that's trading on an exchange and has a little bit more participation out there. But NLST right here, net list, 99 strength rank. Let's switch this to signals here. Now this is one that it broke out of a long range right here. It really took off back in June, July. And since then it looks like it's pulling back. And this looks like it's a wave A. This little sideways move looks like wave B, and it looks like it's finishing up a wave C. Now, wave C could come back down here a little bit further. And so this is kind of one of those that's a little bit early on my radar that I'll kind of keep an eye on, maybe throw it into a watch list. But I'd like to see it come down a little bit further and then start to move back up. But that's something to kind of keep an eye on. It looks like it's kind of forming that ABC correction within that uptrend. So that's one I want to start keeping an eye on. Oh, you know what? This is an over-the-counter. This is over-counter trade, so it may not even be listed on your broker site. So maybe we won't put that in our. I just noticed that. I should have noticed that before. Usually I'll check on that. All right, let's look and see if there's another one in the list here that we can consider. There's another one right here, SGOC, 98 strength rank. So this one is trading on an exchange. It's on the NASDAQ, so that's good. And this is kind of looks like the other stock, except it looks like it's kind of come down a little bit further off of its correction. So we had this little sharp move up right here last month, came back down. Looks like wave A, wave B, wave C. Might still be forming that wave C. And again, it's at a hold signal right now. If this thing keeps drifting down, because it's right at a spot where it's about as far down as I'd want to see it pull back. I don't want to see it retrace 100% of that rally. That's not a good sign if it comes all the way back down. But it's in an area here where it should start to find support and move up. If it comes down too much further here, I probably won't be interested in it. And I'm not in it yet. I'm waiting for that confirmation for it to go back to a buy signal anyway. So if it doesn't go back to a buy signal and keeps dropping, there's no problem there. It just was a little bit of time to put it in a watch list or something like that. So it's no big deal. But if it does start to move back up into a buy signal, you have that nice pullback. It could be starting to make another run. Obviously, something woke up. Look at this long consolidation. Something woke the stock up right here. There's some reason why people got very aggressive buying that thing right there, and then it kind of died a little bit as it pulled back. This happens a lot. You'll get an initial announcement that maybe the company is being considered for an acquisition or something, and it'll spike, and then nothing happens, or there's no additional news, and it kind of pulls back a little bit. And then it starts taking off again. So you see this happen in a lot of early stages of stocks that are just starting to get started. And those are sometimes the ones you want to get involved with, because they can, let's say the stock does start to move back up and it gets back to its highest point that it reached off of that spike up right there. That's around $30. This is $7 down here. Obviously, we'd want to wait for confirmation. Let's say we get confirmation at 12. Now, this thing could double in price by the time it gets to where it was at its all-time high, if this trend is going to continue. So those of you looking for stocks that could be in the very early stages of really taking off, these are some things you would kind of look for. You don't want to jump the gun, though, because this thing could come all the way back down and do this for the next rest of the year or whatever, move sideways down here again. But we could definitely keep an eye on this one, put it in our watch list, and see if it starts taking off again, and see if we can participate in it. Now, I also want to show you, let's go to the retail sector here. I want to show you a couple of stocks that there may be reasons why I wouldn't want to get into them or consider them. I'm showing you sometimes when I go through these stocks some of the patterns that I like. I think from time to time it's a good idea to talk about some of the patterns. Why am I not looking at some other stocks on the list? Why am I passing over those stocks? They have high strength ranks. They have a 98 strength rank. They're in that higher category. Why am I passing it over? Well, part of the process is you want to find these high strength ranked stocks that have really good chart patterns or have really good price action. And so I want to go over a couple of these as reasons why I don't want to get into these or consider these, just to kind of teach you a little bit of what I'm kind of looking at. So if we go into retail, one stock I brought up as one we could take a look at here. I think it might have been last week, was this Boot Barn right here, BOOT, 95 strength rank. And this is moving higher. What I was looking at, and it might have been, maybe I did this one just last class, or I don't know, I can't remember when I pointed this one out. It might have been back in here when it was about to break out. But anyway, it broke out. If I was looking at this today, I don't know that I would chase. Not that the stock isn't in a good uptrend. I don't know that I would get in today, though. It does have a buy signal. It is moving to a new high today. But you can see up here, it's getting close to the right side of that extreme range, reversal risk range, meaning it could be getting ready to go into a bigger correction. So we might be in this area right here, and it could be getting ready to pull back like this. And by the way, this still continued the uptrend. After that pullback, it still broke out higher. But I don't want to buy right here. I would rather wait for it to pull back and then get in after the pullback. And so, again, I'm not saying this stock can't continue to go higher, but as far as the timing of it, it might be getting ready to pull back, and I'd rather wait for it to pull back and then look for another entry point. So I just don't like the entry point within the trend right here, especially since, again, it's near that extreme overbought range, not on the far right side, but it's getting real close. And then on top of that, you can look at the price action today. Let's switch to candles so we can see this. So here the stock opened up here, nice strong opening, gapped up. Here's where it closed yesterday, had a huge open up all the way up here. But look where it's trading now. It's trading down from where it opened. And it looks like with only an hour and a half before the market closes, it looks like it's going to close lower than where it opened. That's a pretty bearish price action. It happened right here too, where it opened higher, closed down here, and then look, it had a little bit of a pullback. Doesn't mean that it has to pull all the way. It doesn't mean it's going to drop all the way down from here. But when you combine a bearish reversal candle with an overbought, with an extreme overbought range right here, it's not screaming a good entry point. Okay, this would tell me to wait. So again, I'm not saying this is not a stock that can't continue the uptrend. I just don't like where it's at right now as far as a new entry into the trade. I'd want to be patient and wait for another chance. Sometimes that's hard. Sometimes we get so focused on trying to find a trade that we get impatient and we'll take anything just to get in. How many of you have done that before, where it's like, man, I want to get into something, and it's like, just give me a reason. And somebody says something, my uncle said this is going to be the greatest thing. You're like, that's a good reason. I'm going to get into that. You know, you're looking for any reason to get in. That's the reason why you're probably losing a lot of money, because there are times when you need to not get in. Sometimes the best trade decision you can make is to not make a trade. And that's one of the hardest things for new traders to learn, is you got that money sitting in cash. You feel like you got to get it into something. No, you don't. You got to get into something good. You got to get into something that has a good chance of working out. And there's a lot of days where it's better that money just sits in your trading account. And there have been a lot of days over the last month, I would say, where it's better that money just sits in your account. And believe me, when you just start getting into anything, and then your account's down 20%, you're going to wish you would have just stayed in cash for the month or whatever. So make that, in fact, put a sign up in front of your desk somewhere that says, you know, sometimes the best trade is to not make a trade, you know, to remind yourself that when you're getting itchy like that, you got to get into something, that you see that sign and it says, it reminds you that maybe you ought to just sit tight and not do anything for that day. All right, here's another one here, and this is probably a little bit. There's a bigger reason that I don't want to consider this. But under retail, let's look at Express, EXPR right here. We can even switch this back to signals even. What jumped out at me as soon as this chart came up is that it looks like what we call a head and shoulders pattern. This is a bearish pattern where it looks like a shoulder, a head, and a shoulder. And this goes back to the training I talked about when you're learning how to recognize trend behavior. Remember, an uptrend, you'll alternate between impulsive and corrective. Well, you're typically always alternating between impulsive and corrective moves. But in an uptrend, you have an impulsive move up, and then you get that choppy kind of step right here. Then you get an impulsive move up, and then you get a choppy step. When you have a trend reversal, very often you have an impulsive up, and then you have an impulsive down, and then you get then the pattern. Then you get your corrective or choppy move, and then you drop. And that's what creates that head and shoulders pattern. So let's see what kind of pattern we have here. We have an impulsive up, and then we have that choppy corrective. There's your ABC pattern right there, A, B, C. And then have impulsive up right here. And then what do you get? You get impulsive down. Not only do you get impulsive down, but it also went to a lower low right here. So you got a break of that. You had higher highs, higher lows here. You get impulsive up, impulsive down, and you get a lower low. And then what should happen then if this is a trend reversal? You got impulsive down, you should start to see corrective, more choppy, more sideways. Look at this. Does that look choppy and sideways? Again, I can't know exactly what the stock is going to do. And sure enough, just because I'm talking about this stock is probably going to take off and go up right here, and it's going to make me look stupid. But and believe me, that happens sometimes, and so that's why we always have to be prepared to look stupid, because we're going to look stupid at times. We're talking about probabilities, and so sometimes if this thing went up straight from here and just ignored that head and shoulders pattern, then that would be a low probability move. But low probability moves will happen. The higher probability here is that this thing is going lower. It's not done correcting yet, and it's based off of what I just showed you here. It was acting like an uptrend, higher highs, higher lows, impulsive, corrective, impulsive, corrective, impulsive, and then we have impulsive up, impulsive down, and we went to a lower low on that impulsive down, and now we're getting corrected. What should happen is you get impulsive down, and that might be it. Maybe you get impulsive down, and then it takes out, and then you get impulsive up again, and then it. So again, I'm not saying that this thing can't eventually move higher, but in the near term, the way it's behaving, it looks like it has another move down. And why would I want to buy it if it's acting like it has another move down? Wait for it to have another move down. Maybe it has an impulsive move down, then an impulsive move up, and then it has a corrective move. Okay, now it's pulled back far enough that now it's acting more like a trend reversal. And that's where I would want to be more involved with it. So now this jumped out at me as soon as I pulled up the chart. It had 98 strength rank, was in the hold section. What I want to look for initially, but as soon as that chart came up, having had that basic trend analysis burned in my head over the years, I immediately saw that potential head and shoulders pattern right there, bearish head and shoulders pattern, and I just decided not worth looking at anymore. I'll pass, because this may show up again later, and it may look like a stronger uptrend, but I don't like it where it's at right now. All right, is there anything in the retail sector we could look at? Well, let's look at this KRUS right here. 95 strength rank, so we're dipping down on the strength rank a little bit there. Now, this one I am interested in, because it looks like it's still acting like an uptrend. You have this corrective move right here, and then you have impulsive up, and then this looks corrected, more choppy, more sideways. That looks like maybe wave A, wave B, wave C. Now, I'd want it to go, and it's retraced about 50% of that move up. It's down near the previous breakout area. This is the previous high right here. It broke out of that. It's kind of pulled back to this area here. Could have a little bit further to drop, but this is one now that if it does stop dropping, that looks like a corrective move, and then if it starts to move back up, it should continue that uptrend. If it never goes back to a buy signal and keeps dropping, then no harm, no foul. I don't care. It never triggered a reason to get in. So we can put that in a watch list to tell us when this thing goes from hold to buy, and we can look at it again at that point to see if it still looks good. So we'll put that one in our watch list. A couple more. Let's go under industrial products. Here's Titan International, TWI, 96 strength rank. And say, well, this one's down, been in a downtrend. Why would I consider this? Well, again, let's look at the behavior here. There's a lower high, there's a lower low, lower high, lower low, lower high, lower low. Oops, this is kind of an impulsive move up right here. Shot right up right there, went to a higher high, went to a buy signal, then pulled back to a hold signal again. And today it's up. It opened down here and it's up today. That could be a higher low right there. And it's possible that this thing is at its pullback and it's starting to move back up. We don't know yet. This could be wave A, wave B. That could be a sucker's rally, and you get wave C that comes down a little bit lower, and it could still, if it does that, have a higher low. but it probably won't go to a buy signal yet. So even if it drops down, even if this is wave A, wave B, and it has a wave C still down here, maybe it pulls back into this area right here, and then it takes off. We could at least put this in our watch list, and it might be in there a little while if it has another move down there, but it's showing the characteristics of possibly reversing back into an uptrend. Why is that important? Well, if it does, let's say it goes back to a buy signal around when it did back here, around $8.76, and that's when we get our alert to get in. And maybe it did have one more move down to kind of form a wave C or something like that. Well, what would be our initial target or expectation of if this thing is going back up again? Where would be a minimum target area of where we think it could get to? Probably back up to this previous high up here, right? Around $11.50. That's a pretty good, it's not quite a double, but that's a pretty good return if it could get back to where it was before. And we don't know if it'll go back to there, and we never know. But if we can constantly keep putting ourselves in position of stocks that are now acting like they're going back up again, and you get a market that's, we're starting to see the small caps come alive a little bit, at least today we are. If that continues, that means the markets could continue to trend higher. And I mean, that's all you can do is put yourself in a position to have these stocks make these moves. And if they do, great. If they don't, you move on to the next one. Eventually, you're going to get one that does. And those are the trades that are going to make you the most money, the bulk of your money for the year. Just keep putting yourself in position of high strength range stocks that look like they're trending up with good entry points and good trade management. All right, a couple others that I mentioned last week under business services. These are kind of related to Bitcoin. Mara, M-A-R-A, Marathon Digital, and Riot, R-I-O-T, Riot Blockchain. Mara is going to a buy signal today. And I think what I'm going to do, now normally we would wait for the email to tell us that. I just have a feeling here with the way things are trading that, and you could, if you notice something like this, if you notice a buy signal and the market hasn't closed yet, you can wait till half hour before the market closes. If it still looks like that, it's going to maintain that buy signal. You have to wait for the email. No, the email is there to just make it real simple, so you don't have to look for it. You just wait for the email. And I did get an email last night on MSTR. I decided to wait. I didn't buy it this morning. I decided to wait because I wanted to do it in class. But if you see, now I would wait till closer to the end of the day because that could change. It could look like a buy signal and the market starts selling off going into the close, and this goes back to a hold. And obviously you wouldn't want to buy into it at that point. But if it looks like it, you're 10 or 15 minutes before the market closes and you're seeing a buy signal on a stock that you have in your watch list, I don't have a problem with you going ahead and getting in because you're gonna get the email. It's just gonna happen overnight, and then what happens if this thing really takes off the next day and you missed that move because you didn't notice the buy signal right before the market closed the day before. So I'm going to go ahead and get into this one now on Riot. It doesn't, at least it didn't have the buy signal yet. No, it didn't have the buy signal yet. So I'm going to wait on this one. And that's still on the watch list. So I'll see if I get the email on that one down the road. All right. So again, part of the training today, let's manage our portfolio here. Let's continue to kind of manage things, and we'll talk about things as we go. Things that I've already had trainings on. We'll kind of put this stuff together and how we kind of run our system here. First of all, again, I got the email alert on MSTR. If we go to the watch list here, here's MSTR. You notice how it doesn't have the alert anymore because it sent me the alert. The thing has gone to a buy signal. So remember, it when the market closed, it closed at a buy signal yesterday, and when it waits until, remember this, the email, the whole system updates overnight after the market closes. So it updated, recognized this had gone to a buy signal, sent me the email. Now, luckily today it's gone up a little bit further, but not too much further to where we're not too far from where that price is, and we're still right at the breakout area. Now, you could choose at this point to wait for it to actually break out as confirmation if you wanted to. I'm not going to do that. I'm going to look to get in. Now, where do I want to place my stop? You could place it below this low right here. That was a higher low right there. If you got higher low and you think you're about to break out to a higher high, this thing's already come down quite a bit. That'd be a little bit of a tighter stop. I'm going to give this trade a little bit more room initially, and I'm going to put a stop down below this low down here, which is around 411. I'm going to put the stop in at 410. That just gives me just a little bit more wiggle room for this thing to kind of find its way. I don't like to get bounced out of trades that look like they're turning the corner, because sometimes they don't always, when they're down here at the bottom, they don't always take off when you think they're going to take off. This thing could ultimately come all the way back down to this low and still be basing for a move higher. It just based a little bit longer than maybe I thought it might. So I like to give a little bit of room, and then I can always move that stop back up. In fact, we're going to move the stop up on a trade win right now that had a big move yesterday. So I can show you how you could adjust your stop as well. But let's go ahead and get into this one here. So how do I get into it? We're going to go to my add to portfolio right here. This little blue tab, blue plus sign right there. Going to ask me to select my portfolio. I want it to be the stock specific class down here. Our portfolio value right now is at 100,733. Remember, this started at 100,000, so we're up $700 so far in our portfolio. We started this last week, so that's not bad for 1 week. Here's the current price of MSTR. That's going to be our entry price. I need to put in our stop. I decided that I'm going to put the stop in initially at 410. Now, because this is a almost $700 stock, I'm probably not going to be able to buy that many shares. If I tried to buy 100 shares of the stock, it would cost almost $70,000. We're going to have a huge part of our portfolio. And based on our stop price, we'd have 27, almost 28% at risk. Remember, we want the risk to be between 1 to 1.5%. So that's way too high. What if I did 10 shares? That's still a 2.77% risk. That's still too high. We can cut that in half. We should be fine. So let's do 5 shares. So 5 shares. It's going to have almost $3,500 into the trade total. If I get stopped out, I could lose about $1,300, $1,400. Actually, about $1,400, which would be about a little over 1%. So, but that's within that 1 to 1.5% risk. And if you want to get it closer to 1, then maybe you're buying 3 shares or something like that. But 5 shares, I think, will be okay with this one. We'll have a little bit higher percentage risk there. And then let's go ahead and let's purchase and then go to my portfolio here. So purchase and go to my portfolio. So now we've got 3 stocks in. We still have a lot of cash available here. We should have a lot of cash available. We're not in a huge condition where we want to be overly aggressive. Now let's check on the trades that we're already in. Let's take a look at PFMT right here. How's it look? It still looks fine. Again, we got in this one. We're still waiting for this one to kind of break out. It kind of got up to that breakout area and it's moving kind of sideways. That's fine. That's good. It could be what we call a cup with handle formation. And if it is that and it breaks out, this thing is going to run. It should run pretty big, usually from the top of the cup to the bottom of the cup, and you project that distance upward. So this one still looks really good. It's not showing us a huge gain right now, but again, you have to be patient. Where you don't know when these things are going to start taking off. Let's take a look at RM right here. This is the other one that we were in. And look at that move that it made yesterday. But this is what I'm talking about this is what we're looking for on that PM, what was that? The other one that we just looked at is that it moved back up that breakout area and it's starting to move a little bit sideways here. So look what happens when it can break out. And we got this huge move right there. Typically, it'll move from the base of the bowl to the top of the bowl. Look, it's already made that move. Now it's starting to pull back a little bit today. So now this thing can keep running, and I want to let it keep going as far as it wants to go. But I also want to, our stop was originally down here, and when you get that type of a move, you don't want it to come all the way back down and have that thing turn from a nice gain into a loss. But I also don't want to put my stop up too tight to where I get bounced out. Maybe it pulls back into the day, I get bounced out, and then it takes off again, and I miss another big move. So let's move our stop up. I want to get it up right underneath this little sideways range. Here's the breakout. I want it to be below the breakout, but here's the little sideways range it was in. Let's move our stop up to about $50. Now we got in a little bit. I think we got in a little bit. Our entry price is a little bit higher than $50. So if it did come all the way back down, we could still have a little bit of a loss, but it would be very minor. And if it did come all the way back down, then this thing isn't in a strong uptrend, and I'd want to be stopped out. But at least this will protect us a little bit from having a big move like that and having it and end up losing a lot of money if it came all the way back down. So how do I adjust that stop? By the way, you don't have to adjust your stop, and they're on your broker account. You could actually put in trailing stops. I did a training on different stops a while back. I can't remember what it was, but you could look for it. They're on YouTube. But I talked about some different strategies for using trailing stops where you're just kind of putting it on autopilot, where you don't have to make these adjustments. But in this case, I'm going to make an adjustment here. We're going to move that stop up to $50. How do I do that? If you go into my portfolio here, so our purchase price is 51. So if I move that up to 50, we could still lose $1.31 if we get stopped out, but that's going to be very minor. And that'd be worth it for the potential of this thing to go higher. I'd be fine with taking that little loss. And again, our original stop was down here at 43, which would have been a much bigger loss if it came all the way back down, although still not more than 1% of our entire portfolio. So to change it, you're going to click right here where you can edit your stop. In fact, you put your mouse over it, says click here to edit stop price. And just change it. We're going to change that to 50. And then click save. All right. Now we've kind of locked in a little, a good part of that move, and hopefully this thing kind of continues to move up. Don't panic that it pulled back a little bit today. That would be normal after a big, huge move like that. Notice how it moved into the far right side of that extreme reversal risk, so the stock is overbought right now. Now, if all you were doing was a trade and you just wanted to see some move and get out, we could have, I probably would have gotten out yesterday off of that big move right there. But if you're not looking at a much bigger move, you're just looking for a burst of a move and you're going to get out, you could. But that comes back to how you were planning on managing the trade, and that should have been your plan going into it. You don't want to be like, oh, I'm going to change my mind here. I was going to ride this thing for a few months, but after this move, I'm going to go ahead and get out. That's not a very sound plan. That sounds like you're making your decisions on a whim, and you're afraid of giving up a gain. I'm telling you right now, if you got to be willing to give up a gain in order to get big profits in the market. You got to be willing to have a stock have a gain and actually end up turning into a loss or turning into a break-even trade. That's going to happen. It's going to happen. We don't know how far stocks are going to go. We don't know how big moves are going to take place. There's going to be up and down every day where it has a good move one day and it pulls back a little bit the next day. We know how stocks move. They stair step, have a move up, and then they pull back, have a move up, they have a pull back. That's how these big trends move. And if you're constantly getting shaken out, that's what forms these ABC corrections. It's a shakeout. It shakes out all the people that don't know why they're buying. They're afraid their gain is going to turn into a loss, so they can just get out. They're very uncommitted buyers, right? Well, it's shaking them out. It's shake out all the uncommitted buyers, and then the committed buyers are back in, and they drive it higher, and that shakes out the uncommitted buyers. And by uncommitted, it means people that don't know what their plan is. They don't know why they're in the trade. They don't know what their expectations are. But if this is going to turn into a much bigger move, I got to be willing to kind of let it pull back a little bit. It shouldn't. If it does, it could pull back all the way to that breakout area. So a lot of times stocks will pull back to where they broke out. Not always, but a lot of times they do. So let's see if that works for us. That stop adjustment works for us there. Okay. All right. And let's add a couple stocks that we looked at today to our watch list. So under the computer technology, we're going to add SGOC. Again, we're wait for this thing to go back from hold to buy. We're going to click on this little green button right here to add it to our watch list. Which watch list? Our stock specific class right here. Let's save and go to watch list right here, because we want to add in the alert. So here it is down here. Go all the way to the right side. We're going to check that alert box. And I want an email alert when this goes from hold to buy. Let's go ahead and click save. Now, before I forget, we entered into MSRT, right? We put that in our portfolio. We don't need it in the watch list anymore. So click on the little X button, remove from list. Let's take it out of there. In fact, we could also look at some of these others, Dillard's. Let's see if that one still looks like we want to keep it in the watch list. Yeah, I want to keep it in there. It went to a sell signal, but it still looks like it's kind of moving within the sideways range right here. It had a nice strong uptrend here. Here would be a lower low if it dropped below that. It hasn't gone below that. That was the last higher low right there. Higher low, higher high, higher high right here. Hasn't dipped below that yet. So let's hold this one. If it does drop further and get below there, we'll probably kick it out of the list. But it still looks okay. And let's look at ZDGE. Yeah, remember this one. I'm just still waiting for this one. And had a nice move up today. It's still a sell signal, but we're waiting for that. It looks like there's the impulsive move up. Here's corrective. Let's see if it starts taking off and goes back to that buy signal. I think that one's worth keeping in there. And that's me personally, but you might decide differently in yours. ASPN. Oh, actually, this one's gone to a buy signal today. This is one that we could look to get in, and we're going to get into Mara early too. We got to speed this up because we'll get into these trades, put them in our portfolio here. Yeah, Riot we're not, Mara we are, and then SGOC is when we entered. There's one other one we're going to enter into the watch list. Let's do that one right here. Let's KRUS. That was under the retail sector. A little pullback. We're going to wait for the signal when it goes back to a buy signal. So I'm going to move a little bit quick on this one just to we're running out of time here. So I want to get into those other trades. So let's add that in, save, and go to watch list. And then let's put the alert in over here. Tell us when it goes from hold to buy. All right, so Marathon Digital. So let's click on Marathon here. We're going to go ahead and get in because it looks like it's going to end up closing at a buy signal there. So I'll probably put the stop down below this low right here. You want to kind of look at, if you put your mouse over this day, I want to get below that low of that day. Let's put our mouse over there, and then we're going to look over here at what the close of that day was. Let me move the chart down a little bit here. Here we go. So the low of that, or actually the low of that day, the intraday low on May the 13th was $18.32. I'm just going to put the stop in at 18. Let's just keep it real simple there. All right, so let's click on add to portfolio. Our stock specific class portfolio here. Oh boy, we've just moved up. We're at we're up $856 now since we started this. All right, stop price instead of 18. Let's put number of shares. Let's start at 100 here, see what that looks like. Yeah, there we go. Right, that's perfect right there. We're right at a little over 1% portfolio risk. We'd have about $3,000 in the trade. If we get stopped out, we could lose about $1,300. And you could reduce that down a little bit. If you want to get it down below 1% or right at 1%, you could do that. But I think that's just fine right here. I like to keep within that 1 to 1.5% range. Let's go ahead and purchase and go to my portfolio. We're in that one. Let's go back to our watch list. And let's take it out now. We're in the trade, so let's take it out, Marathon. We don't need that in the watch list anymore, even though I'm going to get the email tonight. Well, maybe not, because I'm taking it out of the watch list. And then we wanted to add in this ASPN right here, Aspen. Now I'm going to look to put the stop down, well, this low right here at first. Because again, this could be wave A, wave B, and wave C. It comes back down a little bit before going higher. And it looks like the low of that day was $30.43. Let's just put it at 30. So add to portfolio. Stock specific class. Stop price in at 30. And what would 100 shares be? Oh, 100 shares under 1%, so we can do more than that. Let's try 200. That's a little over 1.5% risk. Again, I'm looking at this right here. So let's split that. Let's do 150. That's closer. That's within our range there. That looks like it'll work. All right, purchase and go to my portfolio. And let's go into our watch list and kick that one out. All right, that's it. So hopefully this is helping a little bit. We've done all these trainings, and now I want to focus on these next few updates to just kind of apply what we've been learning and just keep talking about what we're learning until it kind of just sinks in and becomes a little more automatic for you. And hopefully along the way that we see that account continue to grow. I think it will, as long as the market continues to rally from here, and we can make those stop adjustments along the way and kind of go from there. So we'll see how things kind of work out with that. So hopefully this is helpful to you and helps to kind of show you how we kind of put all this stuff together. All right, thanks everyone. Have a good rest of your day. Have a great weekend. We'll see you next Tuesday for the next market update class. Bye now.